Welcome learners. I am R. Nalini, one of the facilitator for the course on financial accounting. This course is introductory course. The profit and loss account gives the amount of profit or loss made by the business during a particular period. However, it is not enough. The businessman must know about his financial position, where he stands, what he owes and what he owns. This objective is served by the balance sheet or possession statement. The balance sheet is a statement of assets and liabilities of the business on a particular date. It serves as barometer for ascertaining the financial health of the business. It communicates the results of business operations to various parties who have some stake to the business: the proprietor, creditors, investors, government and other agencies. Though accounting is generally associated with business, but it is not only business which makes use of accounting. Persons like housewives, government and other individuals also make use of accounting. This course aims at developing skills to understand, evaluate and use financial information in business decision making. Today, I am going to present a lecture on the meaning and principles of double entry system, how to analyze the transactions on the basis of accounting equation approach, how golden rules of double entry system of bookkeeping are applied for business transactions. Let us go to what is double entry system. Double entry system of bookkeeping is a scientific and complete system of recording the financial transactions of an organization. According to this system, every transaction has a twofold effect, that is, there are two aspects involved here. One is debit the receiving aspect and credit the giving aspect. What is the meaning of, what are the principles of double entry system? Here, in every business organization, there are two aspects. The two aspects involved are the benefit receiving aspect and benefit giving aspect. These two aspects involve minimum two accounts, at least one debit and at least one credit. For every debit, there is a corresponding and equivalent credit. If one account is debited, the other account must be credited. Next, we are going to see about what are the steps involved in a double entry system. Nowadays, most of the organization adopt the double entry system for keeping the books of accounts. Hence, the steps involved in the double entry system are: first step is pausing journal entries. Journal is an original book of accounting and it records the effect of all the transactions. Whenever a journal entry is being paused, two accounts are affected. One account is being debited and other account is credited. Hence, for each and every monetary transaction, a journal entry is being paused. Second step is preparation of ledgers. Once the journal entries are being paused, the next step is in preparing the ledgers. It is a collection of all the accounts and it helps in doing the group of accounts. Then third step is trial balance preparation. The next step is preparing trial balance. It is a summary balance of the ledger account, that is comes under trial balance preparation. Then last one is preparation of final accounts. Then finally, the income statement and balance sheet is being prepared. Let us see about what are the approaches of recording transaction. Here there are two approaches for recording transaction. One is accounting equation approach and another one is traditional approach. How to record the transactions under accounting equation approach? What is the meaning of accounting equation approach? Here it's nothing but it's a relationship of assets with that of liabilities to outsiders and to owners in the equation form is called accounting equation approach. This means that total claims of outsiders and the proprietor against a business enterprise will always be equal to the total assets of the business enterprise. That means the total claims of outsiders and the proprietor against a business enterprise will always be equal to the total assets of the business enterprise. As the revenues and expenses will affect capital, that is the equation is assets is equal to liabilities plus owner's equity, or another equation is assets is equal to liabilities plus capital plus revenues minus expenses. So these are the points that comes under accounting equation approach. Let us have look on PPT for classification of accounts under modern approach or accounting equation approach. Here there are 5 accounts involved here. One is asset account, next one is liabilities account, third one is capital account, fourth one revenue account, and last one is expenses account. What is the meaning of asset account? What are the points that comes under asset account? Here asset account it's nothing but any physical thing or right owned that has a monetary value is called asset. For example, land and building, plant and machinery, equipment, etc. Then next one is liability account. Liability account in the sense financial obligation of the enterprise towards outsiders, that is called liabilities account. So these transactions are comes under liability account. Here for example, creditors account, expenses outstanding, that is the example for liability account. Then third one is capital account. Here financial obligation of a business enterprise towards its owners, that is called capital account. For example, capital contributed by the owner. Then next one is revenue account. Here accounts relating to revenue of an enterprise, that is comes under revenue account. Here example for revenue account is profit on sale of goods, rent received, that is comes under revenue account. Then expenses account. Expenses incurred and losses suffered for earning revenue, that is that transactions are comes under expenses account. For example, salaries paid, discount allowed, then purchase of goods, that is comes under expenses account. Here let us look on PPT for types of accounts under traditional approach. Here under double entry system of bookkeeping, for the purpose of recording the various financial transactions, the accounts are classified into personal account and another one is impersonal account. Here personal account. Personal account means it's nothing but here account relating to persons are called personal account. The personal account may be classified into natural personal account, artificial person account, and another one is representative personal account. Here natural personal account. Natural personal account in the sense natural persons means we are the human beings, that this comes under natural person. For example, Murugan account, Ganeshan account, money account. So name of the persons or comes under natural personal account. Then next one is artificial personal account. Here artificial person relates to persons other than human being, that is recognized by law as persons. They include business concerns, charitable institutions, any other financial institutions, that is comes under artificial personal account. Here the example for artificial personal account like any, that is a bank account, BHL account, or any other companies, name of the company, that is comes under artificial personal account. Then last one is representative personal account. Representative personal account in the sense which represent persons natural or artificial or a group of persons. For example, outstanding salaries. Outstanding salaries in the sense the salaries are incurred for this year but not paid during the accounting period is called outstanding salaries. So, that is it is payable to a person. So, it represents a person, so that is comes under representative personal account. Then second one is impersonal account. Impersonal account in the sense all accounts which do not affect persons are called impersonal account. Here impersonal account is again classified into real account and another one is nominal account. What is the meaning of real account? Real account is nothing but all accounts relating to tangible and intangible properties and possessions are called real account. The real account is again divided into tangible real account and another one is intangible real account. What is the meaning of tangible real account? It's nothing but it includes accounts of properties and possessions which can be seen and touched. They have some physical existence. That accounts are comes under tangible real account. Here the example for tangible real account is plant and machinery, building, furniture, stock, etc. Then next type is intangible real account. Intangible real account like it include the accounts of properties and possession but which cannot be seen, which cannot be touched. They don't have any physical existence. That accounts are called intangible real account. The example for intangible real account is goodwill, patent right, copyright, that is comes under intangible real account. Then next type is nominal account. Here nominal account is nothing but the accounts relating to expenses, losses, revenue and gain. These transactions are comes under nominal account. Here the example for nominal account is salaries, wages, rent, discount, all expenses and income, that is comes under nominal account. Then on that basis the rules, the golden rules of accounting. So, what are the golden rules of accounting under traditional approach? On the basis of accounts, under this personal account, the rule of accounting is debit the receiver, credit the.
Now, let us see the accounting cycle. Accounting cycle is a sequence of steps involved in the accounting process. It starts with identification and recording of financial transaction of an organization and ends with the preparation of final accounts for the accounting year. The cycle continues for the next accounting year with the opening balance of assets and liabilities, which are the closing balance of the preceding year. What are the steps involved in the accounting cycle? First one is identifying the transactions and journalizing, posting and balancing. Third step is preparing trial balances. Next one is preparing trading account. Next, preparing profit and loss account, and last one is preparing balance sheet. So this is a process of steps involved in the accounting cycle. First step is identifying the transactions and journalizing. All the monetary transactions are recorded in the books of original entry is called journals. This is otherwise called prime entry. Each and every transaction should be recorded here. Each transaction has two aspects. One is benefit aspect and another one is benefit receiving aspect and another one is benefit giving aspect. Then second one is transferring the entries from the journal to the ledger is called posting. In the ledger, entries are made in each account after classifying them under the common heads. The difference between debit and credit column of ledger accounts is called balancing. Then next step is preparation of trial balance. On the basis of ledger balances, the financial statements are prepared. Next step is preparation of trading account. All the direct revenue and direct expenses are transferred to the trading account. The balance in the trading account is a gross profit or gross loss. Next, preparation of P&L account, profit and loss account. All the indirect revenues and indirect expenses along with gross profit or gross loss are transferred to profit and loss account. The balance in the profit and loss account is the net profit or net loss. Then last one is preparation of balance sheet. The balance sheet is a statement showing the assets and liabilities. Namely, balance sheet is prepared as a final step in the accounting process. So these are the steps for completion of the accounting is called accounting cycle. Now let us see the rules for recording under double entry system on the basis of modern approach. That is rules for accounting equation. This rules helps in understanding the accounting equation clearly. That is, first one is asset. If there is increase in asset, the assets accounts are debited. If there is decrease in assets, the assets accounts are credited. That is, if there is increase in assets, the assets accounts are debited. If there is decrease in assets, the assets accounts are credited. The next one is expenses. Owner's equity is decreased by the amount of revenue expenses. Next one is revenue income. Owner's equity is increased by the amount of revenue income. Outsiders liabilities. When the liabilities increase, outsiders accounts are credited. When liabilities decrease, their accounts are debited. That is, when liabilities increase, outsiders accounts are credited. When liabilities decrease, their accounts are debited. Then capital. When capital is increased, it is credited. When capital is withdrawn, it is debited. So when capital is increased, it is credited. When capital is withdrawn or decreased, it is debited. So the basis of equation is the principle of rights. Accounting deals with property and rights to property. The total of the properties owned by a business is equal to the total of the rights to the properties. The properties owned by the business are called assets. The rights of properties are called equities. The equities may be divided into equity of the owners is known as capital and equity of creditors, who represent the debts of the business called liabilities. These equities may also be called internal equity and external equity. Internal equity represents the owner's equity in the assets and external equity represents the outsider's interest in the asset. So assets is equal to liabilities plus capital, or capital is equal to assets minus liabilities. So now we have to apply the rules for accounting equation. So this is help for preparing the problem under accounting equation. So simply it is called, if asset increases, it shows the debit balance. If asset decrease, shows a credit balance. Expenses in the sense owner's equity is decreased by the amount of revenue expenses. Liabilities, when liabilities increase, outsiders accounts are credited. When liabilities decrease, their accounts are debited. Capital, when capital is increased, it is credited. When capital is withdrawn or decreased, it is debited. Revenue, revenue income, owner's equity is increased by the amount of revenue income. So this is the rules for recording under double entry system. Now let us see some of the problems in accounting equation. How the transactions are analyzed under the modern approach. Some of the transactions here, first one is Banji started business with cash. Started business with cash. Here what are the accounts involved here? First we have to identify what are the accounts involved in the transaction. Banji started business with cash. Here one is cash account and another one is capital account. So in this transaction there are two accounts involved here. One is cash account and another one is capital account. On the basis of accounting classification, a cash account is relating to assets, capital account the same one. If asset increase, so if asset starting the business, so cash introduced by the Banji, so automatically the assets will increase. Then capital is also increased. So if asset increase in the sense, it is to be debited. If capital increase, it is to be credited. So Banji started business with cash. Here what are the accounts involved here? Cash account and another one is capital account. On the basis of account classification, cash is relating to asset, capital is also capital. Whether it is increase or decrease, asset will increase, capital is also increase. So if asset increase in the sense, it is to be debited. If capital increase, it is to be credited. Okay. Then next transaction, purchased machinery for cash. Here there are two accounts involved here. One is machinery and another one is cash. So two accounts involved here. One is machinery and another account is cash. Here machinery is the asset, cash is also asset. Here in that business, machinery purchased, so automatically the asset will increase. Cash goes out of the business, so the cash will be decrease. Now you have to apply the rule for the accounting equation. If asset increase, automatically that should be debited. If asset decrease, that should be credited. Then paid wages. There are two accounts involved here. One is wages account and another one is cash account. Wages account is relating to expenses. Cash account is relating to asset. Here expenses increase. Expenses increase, asset value decrease because cash goes out of the business, so that will be decrease. So if our expenses increased in the sense, automatically the amount of capital reduced. So it should be debited. Then cash increase. So asset cash goes out of the business, so that will be the value of cash should be decreased. So that should be credited. If asset decrease, it may be debited. Then received commission. Here what are the accounts involved here? Cash account and another one is commission account. Cash is relating to asset account. Commission is relating to income. Received commission, so that is treated as income. If asset increase, income is also increase. So here if asset increase in the sense, it shows debit balance. Income increase, automatically the value of capital is also increased, so that should be credited. Then paid telephone bill. Here what are the accounts involved here? One is telephone bill and another one is cash account. Here telephone bill is relating to expenses. So this is the expenses for doing the business. Then cash, telephone bill is paid. So cash goes out of the business, that is relating to asset. So automatically the cash value decrease. Here expenses increase. So expenses, if expenses increase in the sense, automatically the value of capital equity will be decreased. So that should be debited. Then if cash increases, if cash decreases, so that should be credited. Then deposited cash into bank. Here what are the accounts involved here? One is cash account and another one is bank account and another one is cash account. Here both are treated as asset. Here bank, so bank balance will be increase. Here asset account cash, that should cash account, cash deposited into bank, so that is deposited cash into bank. Here bank is relating to asset, so asset value increase. Cash goes out of the business, so that will be decrease. So the cash value decrease in the business. So bank balance increase, but cash value decrease. So decrease. So decrease the value. So that should be credited. Decrease the value, so that should be credited. So if asset decrease the value, that should be credited. If asset increase, should be debited. Then cash sales to rapid. Cash account and another one is sales account. Cash account is relating to asset account. Sales is revenue, that will increase the amount of capital equity. So if asset increase, cash will be increased, revenue that is also increased. So cash, if the asset increase, it is to be debited. If sales increase, it is to be credited. Then withdraw cash from business for personal use. So cash account and another one is drawings account. Then cash account is relating to asset account, drawings account, drawing amount which is to be deducted from the amount of capital. So it reduces the amount of capital. Then cash automatically decrease, so that should be credited. If asset decrease, should be credited. Then capital is also decrease, so it should be debited. So this is the procedure for entering the transactions under the modern approach. Let us see how the transactions as per accounting equation approach. Here the first one is increase in capital and increase in asset. So increase in capital and increase in asset. For example, commenced business with cash. Commenced business with cash. Here cash account and another one is capital account. Rupees 1 lakh. What are the effects of the transaction? Here there are two accounts. One is cash and another one is capital. Here cash comes into the business, so automatically it will increase an asset. Capital provided by the owner, so that is also increasing capital of the owner. Here capital is equal to assets, that is the accounting equation. Here the capital is equal to assets, here cash. So rupees 1 lakh is the value of capital is equal to the value of cash is rupees 1 lakh. So here accounting equation should be equal. Then next one is decrease in liability and decrease in asset. So decrease in liability and decrease in asset. For example, paid creditors. Paid creditors rupees 10,000. Here what are the effect of the transaction? Here cash and another one is creditors. cash and another one creditor. There are two accounts involved here. Here cash goes out of the business, so automatically that will decrease in asset. So decrease in asset. Creditors are paid, so automatically decrease in liabilities. So here both value will be decreased. Now you have to apply the accounting equation. Accounting equation is as liabilities is equal to assets. What is the liabilities here? 10,000. 10,000 is a liability, so that the value is decreased, so minus sign, minus 10,000. Here cash value is also decreased, so minus 10,000. So 10,000 that will be decreased. So accounting equation is equal here. Then next transaction is decrease in one asset and increase in another asset. Decrease in one asset and increase in another asset. For example, bought furniture costing rupees 5,000 by paying cash. Furniture costing rupees 5,000 by paying cash. Here what are the accounts involved here? One is cash account and another one is furniture account. Cash account and another one is furniture account. So here furniture comes into the business, cash goes out of the business. What is the effect of the transaction? Furniture comes into the business, cash goes out of the business. So furniture comes into the business, automatically the asset will be increased. Cash goes out of the business, so the asset value decreased. Okay, so now you have to apply the equation. Liabilities is equal to assets. So what are the assets we have? Cash and furniture. Here cash plus furniture. Here cash value decreased by rupees 5,000. So minus 5,000. Furniture value increased. So 5,000. 5,000 increased plus 5,000. So automatically here liabilities is also 0. Assets is also 0. So here accounting equation should be equal 1. Okay. The next transaction is decrease in one liability and increase in another liability. That is decrease in one liability and another one is increase in another liability. For example, accepted a bill drawn by creditors for rupees 20,000. That is accepted a bill drawn by creditors for rupees 20,000. Here what are the effects of the transaction? Here accepted a bill. So that means bills payable arises. So bills payable arises and another one is the creditors value decrease. Okay, so bills payable, automatically liability will be increased. So increase in liability. Then reduction in creditors, that is decrease in liabilities. Now you have to apply the equation. Liabilities is equal to assets. Here bills payable increase the liability, so plus 10,000. Creditors value 10,000, that will be decreased, so minus 10,000. So here the value of liability is 0 and assets value is 0. So here accounting equation should be equal here. Then next one is transaction affecting more than 2 accounts. So transaction affecting more than 2 accounts. Here goods costing rupees 30,000 sold for rupees 40,000. Here what are the effect of the transaction? One is there are 3 accounts involved here. One is goods, that is stock, and another one is cash, and another one is profit. So here there are 3 accounts involved here. One is stock, that is goods, cash, and another one is profit. Here goods costing rupees 30,000 sold for 40,000. So here goods goes out of the business, so automatically the asset value decrease, that is stock value decrease. Cash comes into the business, so asset value increased. So asset value increase. Here the 30,000 value cost of the goods which is sold for 40,000. So what is the profit here? 10,000, that is 40,000 minus 30,000. 40,000 so 30,000 is the cost price, 40,000 is the selling price. Now we have to find out the profit. So 40,000 minus 30,000. Is equal to 10,000. So 40,000 minus 30,000, 10,000. 10,000 is the value of profit. So profit will be increased. So if profit increase in the sense, automatically the value of capital is also increased. So 10,000 increase the value of capital. So add 10,000. So liabilities, what is the equation here? Liabilities is equal plus capital is equal to asset. So here capital, the profit will be increased. So profit plus 10,000. Here cash comes in, there is cash comes into the business. So increase the asset plus 40,000. Stock value decrease minus 30,000. So the value of accounting equation is 10,000 is equal to 10,000. Okay, is it clear? Now, looking in the problem relating to accounting equation. Here the problem is, show the effect of following transactions on the accounting equation. That is, show the effect of following business transaction on the accounting equation. Here Anbu started business with cash rupees 20,000, goods value 12,000, machinery value rupees 8,000. Next transaction is purchase goods from Ramani on credit rupees 7,000. Next payment made to Ramani in full settlement rupees 6,900. Sold goods to Rajan on credit costing rupees 5,400 for 6,000. Next receipt from Rajan rupees 5,800 in full settlement of his account. Last transaction is wages outstanding rupees 400. Here for the first transaction, Anbu started business with cash. First we have to identify what are the accounts involved in this transaction. Let us see the solution for this problem. Here first one is started business with cash, stock and machine. Cash, stock and machine. So what are the accounts involved here? One is cash account, stock account, machine account, and another one is capital account. So we have to provide the column for cash account and stock account, machine account, and one more account here, debtors account. Then here liability side, capital account plus liabilities. Here started business with cash, stock and machine. Here the cash value increased rupees 20,000. Stock value is also increased plus 20,000, 12,000. Machinery value is also increased rupees 8,000. So the total of all these items rupees 40,000 is the amount of capital credited. Okay, so here stock value, if the asset value rupees 20,000 increased, cash 20,000 increased, stock 12,000 increased, machinery value 8,000 increased. The total value of 40,000 is also increased. The amount of capital is also increased by rupees 40,000. Now you have to apply the accounting equation. Assets is equal to capital plus liabilities. So 20,000 plus 12,000 plus 8,000. What is the total of all these items? 40,000. So 40,000 is equal to 40,000. Here accounting equation should be proved. Then next transaction is credit purchases. So credit purchases in the sense, what are the accounts involved here? Purchase account and another one is creditors account. Purchase account and another one creditors account. So there are two accounts involved here. One is purchase account and another one is creditors account. So the stock automatically increased rupees 7,000. So plus 7,000. So plus 7,000. Creditors is one of the liability, so that should be recorded here under this liabilities column rupees 7,000. So liabilities is also increased. Asset value is also increased. Asset is relating to, purchases is relating to asset, that is stock. So 20,000 plus 12,000 plus 7,000, 19,000. The stock value increased by rupees 7,000. Here 8,000, here 40,000 plus 7,000. So here totally 47,000 here. So the total of the liability side is 47,000. Here the total of the asset side 20,000 plus 19,000, 39,000, 39,000 plus 8,000, 47,000. So the assets total is 47,000. Now your accounting equation should be proved. Here assets is equal to liabilities. So 47,000 plus is equal to 47,000. Is it clear? Okay. The next transaction. Payment made to Ramani in full settlement. So payment made to Ramani in full settlement. So already the amount paid to Ramani rupees 7,000. We have received the discount rupees 100. So 100 is a discount receipt. So that is the income for us. So automatically the capital value increased. So plus 100 rupees. 6,900 is paid out of 7,000. So automatically the cash value will be decreased. So minus 6,900. Here liability is also decreased. That is the creditors value is also decreased. Rupees 7,000 minus 7,000. Is it clear? So payment made to Ramani in full settlement. Here 6,900 is paid out of 7,000. So 100 is treated as discount receipt. So discount receipt is a revenue for us. So automatically the value of capital will be increased. So plus 100. Minus 7,000 decrease the value of creditors. So minus 7,000. 6,900 cash paid. So minus 6,900. Now you have to apply the equation 20,000 minus 6,900, 13,100. So 20,000 minus 6,900, 13,100. Here 19,000. Here there is no effect here. So 19,000 the same thing. Here 8,000 machinery 8,000. Here 40,000 plus 100, 40,000 100. Here 7,000 minus 7,000. Here there is no effect. So dash. Now you have to prove the accounting equation. 13,100 plus 19,000, 32,100. 32,100 plus 8,000, 40,100. So our total asset side 40,100. Liability side is also 40,100. So their accounting equation should be proved. The next one is credit sales. Credit sales, automatically the goods goes out of the business. So stock value decrease. So stock value decreased by rupees 5,400. Here debtors value increased. So debtors value 6,000 increased. So the difference between these two rupees 600 is considered as profit. So that profit will increase by the amount of capital. So profit on sale of goods. So 600 is a profit that should be increased. The amount of capital plus 600. Now you have to apply the equation. Rupees 13,100. Here there is no effect on the cash. So 13,100 same thing. Here stock value 19,000. So out of 19,000, 5,400 value of stock should be sold out. So decrease the value of stock rupees 5,400. So remaining amount is 13,600. So 8,000 is the value of machinery increased. Then debtors value 6,000. Here the same amount 6,000. 40,100 plus 600, 40,700. So here the total of here 13,100 plus 13,600. 26,700. Then plus 8,000 plus 6,000. So totally 40,700. So total value is 40,700 is the value of asset. So 40,700 is the value of asset is equal to 40,700. That is liability side capital plus liability 40,700. So here accounting equation should be proved here. 40,700. So 40,700 is equal to 40,700. Then cash received from Rajan in full settlement. So here 5,000 out of 6,000, the amount paid to Rajan rupees 5,800. So plus 5,800. Here debtors value minus 6,000. So the difference between these two discount allowed rupees 200. So that the amount of capital will be decreased. So automatically minus 200. So the 40 here already 13,100 plus 5,800, 18,900. The total is 18,900. Here 13,600, here there is no effect on the stock, so the same amount. Here 8,000, here machinery value, the same thing. Then 6,000 minus 6,000, automatically here 0, here there is no effect. And then next one is here 40,700 minus 200, 40,500. Now equalizing the transaction, 18,900 plus 13,600 plus 8,000. What is the total value? 40,500. So the total value of asset side 40,500. So 40,500 is equal to 40,500. So their accounting equation should be proved here. The same amount. So assets is equal to liabilities. So 40,500 is the value of asset. Similarly 40,500 is the value of liabilities. Now the accounting equation should be proved. Then next one is wages outstanding. Wages outstanding rupees 400, that is one of the liability. So add the 400 is the liability, then decrease the value of capital, so minus 400. Here there is no effect on the asset. So asset as it is 19,900, 13,600, 8,000, here dash. Then here 40,500 minus 400, 40,100. Here 400. Now you have to total it. That is 40,100 plus 400, 40,500. Here the total of here 13,900 plus 13,900 plus 13,000, 18,900 plus 13,600 plus 8,000 is equal to 40,500. Okay. Do you understood this problem? Okay, then next. Now, looking in the problem is relating to accounting equation. Show the effect of the following business transactions on assets, liabilities and capital through accounting equation. Commenced business with cash, rupees 20,000. Goods purchased on credit, rupees 7,000. Furniture purchased, rupees 3,000. Paid to creditors, rupees 2,000. Amount withdrawn by the proprietor, rupees 4,000. Creditors accepted a bill for payment, rupees 1,500. Interest on capital, rupees 1,000. Transfer from capital to loan, rupees 5,000. Allotted shares to creditors, rupees 1,000. Here these are the different transactions are given here. So the accounting equation which is prepared on the basis of assets, liabilities and capital. Here the first transaction is commenced business with cash. Here what are the accounts involved here? One is cash account and another one is capital account. Cash account and another one is capital account. There are two accounts involved here. Cash increased. Here automatically capital is also increased. Okay, so cash increase and also capital is also increased. So the transaction of increase in asset and increase in the amount of capital, rupees 20,000. Then next transaction is goods purchased on credit. Goods purchased on credit. Here purchase account and another one is creditors account. Purchase account and another one is creditors account, rupees 7,000. Here goods comes into the business, so automatically the stock value increase. So here assets increase and liabilities is also increase. Here assets and liabilities increased. So here purchase account and another one is creditors account. So increase in asset and increase in liabilities, rupees 7,000. Then next transaction is furniture purchased. Furniture purchased. So furniture is also one of the asset. So furniture account and another one is cash account. Here asset value increased. Furniture value is increased then cash will be decreased. So cash goes out of the business, furniture comes into the business. Okay, so here furniture value increased, cash value decreased. Then next transaction is paid to creditors. Amount paid to creditors. Here what are the accounts involved here? Cash account and another one is creditors account. So here cash account decreased, creditors is also decreased. Amount paid to creditors. So the liability of the creditors value decreased. Then cash value is also decreased, rupees 2000. Next, amount withdrawn by the proprietor. So amount withdrawn by the proprietor, here cash account and another one is bank account. Here cash, the amount is utilized for office purpose, in the sense cash comes into the business, so cash account will be increased, that is asset value increase. Here bank balance is reduced, so bank value of cash at bank, that will be reduced, so minus bank account. Then creditors accepted a bill for payment. So creditors accepted a bill for payment, in the sense bills payable. Bills payable one of the liability. So bills payable, that is the liability increased. So increase in liability, rupees 1500. Then interest on capital. So the interest on capital is expenses for the business. The capital value increased. Then transfer from capital to loan. So transfer from capital to loan. So the amount of capital transfer to loan, so that is the liability. Then allotted shares to creditors, that is also one of the liability. So next we are going to see about how these transactions are recorded in the books of accounting equation. Now looking in the solution for the problem. Transaction, assets is equal to liabilities, cash plus stock plus furniture. Liability side, creditors, bills payable plus loan plus capital. So first one is commenced business with cash, rupees 20,000. So what are the accounts involved here? One is cash account and another one is capital account. Here cash value increased, so plus 20,000. So cash value increased plus 20,000. Stock, here there is no, here capital is also increased, plus 20,000. Then next one is goods purchased on credit, rupees 7,000. Here stock value increased, rupees 7,000. Stock value increased, rupees 7,000. So automatically creditors value is also increased, rupees 7,000. So now you have to prove the accounting equation. 20,000, here new equation is 20,000. 0 plus 7,000, 7,000. Here there is no effect. Creditors value 7,000. Then the capital value is 20,000. Now you have to apply the procedure. So here 20,000 plus 7,000, 27,000. Liability side 7,000 plus 20,000, 27,000. So 27,000 is equal to 27,000. Here accounting equation should be proved here. Is it clear? So the total of the assets value, here assets here, so 20,000 plus 7,000. 20,000 plus 7,000, 27,000. Here liability side 7,000 plus 20,000. So 20,000 plus 7,000, 27,000. So 27,000 is equal to 27,000. So here accounting equation should be proved. Then next one is furniture purchased. Here what are the accounts involved here? Furniture account and another one is cash account. Here the cash value decreased because cash goes out of the business. So cash value decreased. Here furniture, that is increase the value of the asset. So plus 3,000. Here there is no effect on the liability. Now you have to add this one, 20,000 plus 3,000. So 20,000, here cash value decreased by rupees 3,000. So 20,000 minus 3,000, 17,000. So 17,000 is the value of cash in hand. Then 7,000 is the value of stock. Here 7,000 already we have, there is no effect on this side. So plus 7,000, 3,000 is the value of furniture, creditor 7,000, here 20,000 is the value of capital. Then next one is, so here what is the equation here? 17,000 plus 10,000, 27,000 is equal to 7,000 plus 20,000, so 27,000. So accounting equation should be proved here. Then next to paid to creditors. So paid to creditors, here what are the accounts are involved here? One is creditors account and another one is cash account. Creditors account and cash account. Here cash will be increased. Paid to creditors, so we have paid the cash, so minus 2,000. So here minus 2,000. So minus 2,000. Here 0. Here there is no effect on stock, no effect on furniture. Here now the value of creditors value decrease. So minus 2,000. Here, so here decrease in value of asset and in decrease in value of liabilities. So 17,000 minus 2,000, 15,000. Here 7,000, 3,000. Here 7,000 minus 2,000, 5,000. So here 20,000. So now the accounting equation is here 25,000 accounting equation, the liability side 25,000. Here 15,000 plus 10,000, 25,000. So here accounting equation, assets 25,000 is equal to liabilities 25,000. Now the accounting equation should be proved. Now let us see another problem in the accounting equation. Present the following transactions in the accounting equation. Ram started business with cash rupees 25,000 and check of rupees 25,000 to open a bank account. Second transaction is purchased goods for cash rupees 700. Third one, withdraw cash for private use from bank rupees 700. Third, next one is receive interest from bank rupees 100. Pay to creditors rupees 400. Purchase goods on credit rupees 4,000. Purchased furniture for cash rupees 500. Paid rent rupees 200. Sold goods on credit rupees 700, but the cost price is rupees 100. Sold petty expenses rupees 200. Now we have to identify the transaction. Here Ram started business with cash. What are the accounts involved here? Cash account and another one is capital account. Here check rupees 25,000 to open a bank account. So account open with the bank account. So there are three transactions here. One is cash account, bank account and capital account. Cash account, bank account and capital account. Here cash account is debited. Cash account. There are three accounts involved here. One is cash account and open a bank account. So bank account, and another one is capital account. So capital account. Here cash, that will increase the capital of the business. So cash increases, bank balance is also increased, capital is also increased. Then next one is purchase goods for cash. Here there are two accounts involved here. One is purchase account and another one is cash account. Here purchase goods for cash. Here for goods purchased, so stock will be increased, then cash will be decreased. Then withdraw cash for private use. So withdraw cash for private use from the bank. So that is drawings account, and another one is bank account. Receive interest from bank. Receive interest received in the sense that is a income for us. So that will increase the amount of capital. Then next one is bank balance is also increased. Then paid to creditors, cash account and creditors account. Here the liability of the creditors will be decreased and cash also decreased. Then purchase goods on credit. So purchase account and another one is creditors account. Purchase account and another one is creditors account. Here stock value will be increased as well as liability of the creditors is also increased. The next one is purchase furniture for cash. Furniture account and another one is cash account. Here both are asset. Here furniture value increased, cash value decreased. Then paid rent. Rent account and another one is cash account. So this is the expenses that will reduce the amount of capital. Then next one is cash is also reduced here. Sold goods on credit. So here sales account and another one is debtors account. Sales account and debtors account and profit is also included here. Then petty expenses. Petty expenses account and another one is cash account. So it will reduce the amount of capital. So these are the procedure for identifying the transaction. Then after identifying the transaction, which account is to be debited and which account is to be credited. That means under this modern approach, which is to be increase the value and decrease the value. Let us see now the solution of the problem. Here first one is Ram started the business. First transaction is Ram started business by way of cash 25,000. So increase the value of cash. Then bank balance is also increased. So the capital value 50,000. So they invest the amount of capital 50,000. So the equation is cash plus 25. The cash is 25,000. Bank balance 25,000. So 25,000 plus 25,000 50,000. So 50,000 is equal to capital amount is also 50,000. So the accounting equation should be proved here. So 50,000 here also 50,000. So accounting equation should be equal here. Then next transaction is purchase goods for cash. Here purchase goods for cash, here stock will be increased. So plus 4,000. Then liabilities of the creditors is also increased. So here plus 4,000. Here capital is 50,000. So add these items. That is cash 25,000. Bank balance 25,000. Stock value 4,000 increased. Here capital amount is 50,000. Then goods value, that is creditors value 4,000. So the accounting equation is here 25,000 plus 25,000 50,000. 50,000 plus 4,000 54,000. So here 54,000. The total is 54,000. Cash already we have 25,000. Bank balance 25,000. Stock value now it is increased by 4,000. So totally 54,000. Here already the amount of capital is 50,000. Then liabilities of the creditors that will be increased. So 50,000 plus 4,000 54,000. 50,000 plus 4,000 is equal to 54,000. Now the accounting equation should be proved here. That is assets is equal to liabilities plus capital 54,000. The next transaction is purchase goods for cash for rupees 1,000. Here purchase goods for cash. So stock value will be increased rupees 25,000. Sorry, 1,000 rupees. 1,000 cash value rupees decrease 1,000 rupees. So there is no transactions here. So 25,000 minus 1,000 24,000. Already we have 25,000 as at the bank. So here 25,000. So 4,000. Here stock value here already 4,000 plus 1,000 5,000. So here 50,000 capital amount 4,000. Here there is no effect on the liabilities. So here purchase goods for cash. Here goods purchased. So stock value will be increased 1,000 rupees. But the cash goes out of the business. So minus 1,000. 1,000 rupees cash that will be decreased. So 25,000 minus 1,000 24,000. So what is the total of these items? 24,000 plus 25,000, 49,000, 49,000 plus 4,000, 54,000. So the total value of the asset is 54,000. So the liabilities is also 54,000. So 54,000 is equal to 54,000 should be equal here. Okay. I hope that you understand this problem. Okay, next we have to move on another continuation of the problem. Now we have to see the continuation of the problem. Here next transaction is purchase furniture for cash. So purchase furniture for cash. Here we have purchased the furniture, that is the assets for the business. So here cash value decreased by rupees 500. Here furniture value increased, so asset will be increased 500. The capital is the same amount. Then equation is already we have 23,500, bank balance 25,000, stock balance 5,000. Here furniture value now it is increased 500. Already the capital amount is 50,000. Creditors amount is 4,000. There is no effect on the liabilities. Then next one is withdraw cash for private use. Private use in the sense drawings. So withdrawn from bank. So the bank balance will be decreased. So here minus 700. The bank balance will be decreased. So minus 700. Here capital is also decreased. So minus 700. So 25,000 minus 700, 24,300. Here capital value already 50,000. Now it is reduced by rupees 700. So the amount is 49,300. Okay. So here cash value is 23,500. Bank balance 24,300. Next is stock value 5,000. Furniture value rupees 500. Then capital 49,300. Creditors value 4,000. Then paid rent for rupees 200. There is note for here. Paid rent for rupees 200. Here rent account and another one is cash account. Cash will be reduced by rupees 200. Here capital is also reduced rupees 200. So 23,500 minus 200, 23,300. Then bank balance 24,300. Here stock value 5,000. Furniture value 500. Here capital amount is 49,100. Then creditors value 4,000. Then next one is receipt interest rupees 100 rupees. So income interest receipt, that is the income for us. So automatically the amount of capital will be increased and cash is also increased. So already we have cash bank balance 24,300 plus 100, 24,400. Here 23,300. Then stock value 5,000. Here 500. Here 49,200. Here 4,000. Okay, the total of this is 49,200 plus 4,000, 53,200. So the total is 53,200. Here 23,300 plus 24,400 plus 5,500, totally 53,200. So the total of the equation should be equal here. Okay, the next here also continuation of the problem. Received interest rupees 400. The received interest, that is the income for us. So automatically the bank balance will be increased. Then capital is also increased. Then here equation is cash is equal to 23,300, bank 24,400, stock value 5,000, furniture value 500, then capital 49,200, liabilities of creditors is 4,000. So 4,000, here 49,200, here furniture value 5,000, then stock value 5,000, then bank balance 24,400, cash balance 23,300. Next transaction is sold goods costing rupees 500 for rupees 700 on credit. So here 23,300, so sold goods rupees costing 500 for 700. So 500 is the value of stock, So 500, then 200 is the profit. That is 700 is the selling price. Selling price 700, that is recorded under debtors column. 700 minus 500, 200 is the profit. That is to be considered as profit. So the amount of capital will be increased. So 200. So the remaining amount is here 23,300, 24,400. Next one here 5,000 minus 500, 4,500. Because the stock value decreased, so that should be deducted from the amount. Then here 500 the same thing, there is no effect. Debtors also increased rupees 700. Then here the capital value is 49,400. Here liabilities creditors amount is rupees 4,000. So now you total here next transaction is paid to creditors rupees 400. So paid to creditors. So automatically the cash value decreased rupees 400. Then creditors value increased rupees 400. So the liability increased and cash will be decreased. So the net amount is 23,300 minus 400, 22,900. Here 24,400. Here 4,500. Next here 500, rupees 700, 49,400, 3,600. Then next one is paid petty expenses. Paid petty expenses rupees minus 200. So expenses, the cash will be automatically reduced. So minus 200 cash reduced, so minus 200. Then expenses, the amount of capital is also reduced, so minus 200. So the net amount is 22,900 minus 200, 22,700. Here 24,400. Next 4,000. Stock value is 4,500. Then furniture value is 500. Debtors value 700. Here capital value 49,200. Liabilities to creditors rupees 3,600. So what is the total of the liability side? So 6 plus 2, 800. Then 3 plus 9, 52,000. So 52,800. It's wrongly recorded here, sorry. So the total amount is 52,000. So 49,200 plus 3,600, 52,800. So 52,800. Now you have the asset side here 27,700, 22,700 plus 24,400 plus 4,500 plus 500. So totally 700. So totally 800 here 4. So 52,800. So asset side total and the liability side totals would be equal here. 52,800. So 52,800 is equal to 52,800. So the accounting equation should be proved. Okay. Do you understood? Okay, then.
Now, let us see problems in accounting equation. Prepare the accounting equation from the following information. Sachin started business and introduced capital of rupees 1 lakh in cash. Second transaction is purchased goods in cash rupees 50,000. Third transaction, purchased furniture from this Ramrat Furnitures rupees 20,000. Next transaction is sold goods costing rupees 25,000 for rupees 35,000 against each. Paid this Ramrat Furnitures in cash. Here first transaction, Sachin started business and introduced capital of rupees 1 lakh in cash. Here what are the accounts involved here? One is cash account and another one is capital account. Here one is cash account and another one is capital account. Okay, there are two accounts are involved here. One is cash account and another one is capital account. Here cash is also increased, capital is also increased. So the amount of cash is also increased and capital is also increased. Okay, so with the capital, because the capital introduced by the proprietor, so the amount of capital will increase. Cash, they are invested in the form of cash, so cash is also increased. The next transaction is purchased goods for cash. Purchased goods for cash, here purchase account and another one is cash account. Purchase account and another one is cash account. Here purchase, the goods stock is also increased, cash will be decreased. It does not affect the liabilities, it affects only the asset. So stock value increase but the cash value decrease. Okay, the next transaction is purchased furniture. Purchased furniture from Samrat Furniture's account. This is a credit transaction. So here furniture asset will be increased. Asset increase. So we have furnitures from somewhere. So creditors. Liability is also increased. The value of asset increase. Then liability is also increased. Then sold goods costing rupees 25,000. That is sales. Sales. So sales, then 25,000 value of the goods sold for 35,000. So here profit is 10,000. Profit is 10,000. That is 35,000 minus 25,000 is equal to 10,000. 35,000 minus 25,000 is equal to 10,000 is the profit. 35,000 minus 25,000 is equal to 10,000 is the profit. So this is added with amount of capital. So profit is added with amount of capital. So here there are three accounts involved here. One is cash and another one is sales. That is stock, cash, and another one is stock, and another one is profit. Okay. Here cash value increase. So we have goods sold. So automatically cash comes into the business. So cash value increase. Here stock value decrease. Profit increase, which is added with amount of capital. Added with amount of capital. The next one is paid Samrat Furnitures in cash. So cash goes out of the business. Creditors value decrease. So liability decrease. Creditors value decrease because the amount paid to creditors. So automatically liability decrease. Cash is also decrease. Okay, Sachin started business and introduced capital rupees 1 lakh in cash. A capital, the amount of capital increase and cash is also increase. Purchase goods in cash. Purchase goods in cash. Here purchase stock will be increased and cash is also increased. Then purchased furniture from Samrat Furnitures rupees 20,000. A furniture is also increased. Then cash creditors, that is purchased on the basis of credit basis. So creditors also increased. Then next one is sold goods costing rupees 25,000. So 25,000 for 35,000 against cash. So here cash, stock and profit, there are three accounts involved here. So cash account will increase, stock account decrease, profit of rupees 10,000 which is added with the amount of capital. Then paid versus Samrat Furnitures in cash. Here cash account and another one is creditors account. Here cash account decrease, creditors is also decrease. Is it clear? Okay. Let us see how these problems, let us see the solution for this problem. First transaction is Sachin started business with cash. Here what are the accounts involved? Here one is cash account and another one is capital account. So cash, in that assets column, cash, so as cash is relative to asset, so we have written the same thing, 1 lakh. Then the amount of capital increase, so add 1 lakh. So this was increase, so we can use add. Purchase goods in cash, so purchase the stock value increase, so asset increase, so add. Asset increase, add. Here there is no liabilities here. Then stock value decrease, so that's why cash value increase. This is a cash decrease, stock increase. So cash decrease, stock increase. So stock plus 50,000. Stock 50,000, add 50,000, cash will decrease minus 50,000. So 1 lakh amount. New equation is 1 lakh. Asset is 1 lakh. Then capital is also 1 lakh. So one asset is equal to liabilities plus capital is equal to 1 lakh. Then purchase furnitures. This is Samrat company. Here asset furniture value increased. Liabilities creditors also increase. Creditors. So creditors 20,000 increase. So add 20,000. So here 1 lakh plus 20,000 is equal to 1 lakh 20,000. Already we have 1 lakh value of asset. Now the furniture value increased. So 20,000 to 1 lakh plus 20,000, 1 lakh 20,000. Here liabilities increased 20,000. Capital is also 20,000. So 1 lakh 20,000 is equal to 1 lakh 20,000. Then sold goods costing rupees 25,000 for 35,000. So what is the profit here? The profit is 10,000. Profit rupees 10,000. That is 35,000 minus 25,000. 35,000 minus 25,000 is equal to profit. Okay. That is 35,000. Minus 35,000 minus 25,000 is equal to 10,000. 10,000 is the profit that is added with, that is a revenue for us. So that is added with the amount of capital. $35,000 is the goods sold, value of goods sold, but actual value is 25,000. That are goods sold for rupees 35,000. So the difference between these two is 10,000 is the profit, that is revenue for us. So that is added with amount of capital. So here 1,25,000. Here minus 25,000 is the stock value. Stock value decreased. So this is 25,000 is the stock value decrease. stock decrease, so minus 25,000. Okay, cash increase, so plus 35,000. The stock value is 25,000. A stock value 25,000, but we receive the cash rupees 35,000. So cash increase, stock value decrease. Okay, stock value decrease because the goods sold out of the business. So stock value minus 25,000, cash value plus 25,000. Here profit, the difference between these two is profit. So that profit is added with amount of capital. So 1,20,000 minus 25,000 plus 35,000 is equal to 1,30,000. Here 20,000 is the liability value. 1,10,000 is the 1 lakh plus 10,000 is equal to 1,10,000. Then paid Hamlet furnitures. Here cash paid. So cash paid automatically, cash reduced. So cash. So that is asset. Cash decrease. Cash paid. So automatically the value of cash decrease. So minus 20,000. Here creditors is also decrease. So creditors is also decrease. So minus 20,000. Okay, so 1,30,000 minus 20,000 is equal to 1,10,000. Here minus 20,000 is 0. 1,10,000 plus 0, 1,10,000. So the new equation will be approved. So assets is equal to liabilities plus capital. Okay. Now let us see how to calculate total assets of the business. Here capital is rupees 4 lakh, creditors value 3 lakh, revenue earned during the period 7,50,000, expenses incurred during the period is rupees 2 lakh, and the value of unsold stock rupees 2 lakh. How to calculate the total assets of business? Okay, here the information given for capital and liabilities, then revenue, expenses, value of unsold stock. So the total assets is equal to liabilities plus capital plus profit. Now we have to find out the total assets. Here capital was given, liabilities was given, revenue and expenses was given. Okay, value of unsold stock was given. So find out the total assets of the business. So what is that formula applicable here? As usual, assets is equal to liabilities plus capital. If there is any profit, that amount was added to the amount of capital. Here revenue was given and expenses was given here. So what is the revenue for the business? So revenue is rupees 7,50,000 is a revenue. 7,50,000. Expenses rupees 2 lakh. You have to find out the profit. So profit is equal to 7,50,000 minus 2 lakh. So profit is equal to 7,50,000 minus 2 lakh is equal to 5,50,000. Okay. So now you have to find out the total assets. Total assets is equal to liabilities plus capital plus profit. What is the liabilities? Liabilities amount is 3 lakh. Liabilities 3 lakh. The capital amount is rupees 4 lakh. Profit is already revenue given 7,50,000 minus 2 lakh is 5,50,000. So now you add 3 lakh plus 4 lakh 7 lakh. 7 lakh plus 5,50,000 12,50,000. So 12,50,000 is a total asset which is including 2 lakh is a closing stock. Okay. Is it clear? Okay. The next one is, here also they calculate the total assets. If the capital of a business is rupees 70 lakh and liability is rupees 40,000, calculate the total assets. Now you have to apply the equation. Total assets is equal to capital plus liabilities. So total assets is equal to
capital plus liabilities. So what is the amount of capital? Capital is rupees 70,000. So capital is rupees 70,000. Liabilities is rupees 40,000. So plus 40,000. So 70,000 plus 40,000, 1,10,000. So the total assets is rupees 1,10,000. Okay. The next problem is on 31st March 2017, total assets and external liabilities were rupees 1 lakh and rupees 3,000 respectively. So the total assets value rupees 1 lakh, external liabilities 3,000. During the year, the proprietor has introduced additional capital of rupees 10,000 and had withdrawn rupees 6,000 for personal use. He made a profit of 10,000 during the year. Calculate the amount of capital as on 1st April 2016. So now we have to find out the opening capital. So the information was given at the end of the March 2017. So now you have to calculate the opening capital as on 1st April 2016. So we have to calculate the opening capital as on 1st April 2016. Here, what are the informations are given here? Total assets rupees 1 lakh. Total assets rupees 1 lakh. External liabilities 3,000. The proprietor introduced the additional capital is 10,000. The drawings is 6,000. Profit is 10,000. Okay. Now you have to calculate the opening capital. Before calculation of the opening capital, first one, you have to calculate the closing capital. Closing capital is equal to closing assets minus closing external liabilities. So what is the closing assets here? Closing assets is 1 lakh. So 1 lakh is the closing asset. Closing external liabilities rupees 3,000. That is closing external liabilities rupees 3,000. Here total assets is 1 lakh given here. Okay. So closing capital is equal to 1 lakh minus 3,000, 97,000. Closing capital 1 lakh minus 3,000 is equal to 97,000. So opening capital is equal to closing capital plus drawings minus additional capital minus profit. So the closing capital is 97,000, drawing 6,000, additional capital introduced minus 10,000. So profit is 10,000. Then the opening capital is 83,000. Okay. Opening capital, you have to apply the formula here. Closing capital plus drawings minus additional capital minus profit. Okay. So 97,000 is the closing capital. Add drawings rupees 6,000 minus 10,000 is the additional amount of capital minus profit 10,000. So the value of opening capital is 83,000. Okay. You understand? Okay. Then next one is here. Let us see how to calculate closing capital and profit earned during the period. Here A commenced his cloth business on 1st April 2016 with a capital of rupees 30,000. On 31st March 2017, his assets were rupees 50,000 and liabilities were rupees 10,000. Find out his closing capital and profit earned during the year. So, A commenced business, cloth business on 1st April 2016. The amount of capital is 30,000. On 31st March 2017, his total assets was given 50,000. Liabilities 10,000. Find out its closing capital and profit. Now we have to find out the closing capital and profit. So, what is the formula for here? Total assets is equal to capital plus liabilities. Here total assets was given 50,000 is equal to capital plus liabilities. Capital plus 10,000 is the liabilities. Now you have to find out the closing capital. So closing capital is equal to 50,000 minus 10,000. So 50,000 minus 10,000, 40,000 is the amount of closing capital. Okay, so closing capital is equal to 50,000 minus 10,000 is equal to 40,000. So profit is equal to closing capital minus opening capital. What is the closing capital here? Closing capital is 40,000. Closing capital 40,000. Opening capital is already given 30,000. So the amount of profit is 10,000. So closing capital minus opening capital is equal to amount of profit 10,000. Okay. The next, let us see. Next we have to calculate the amount of capital. X has following assets and liabilities as on 31st March 2017. Determine its capital. X has following assets and liabilities as on 31st March 2017. Determine its capital. Here cash 25,000, bank rupees 47,500, debtors 18,000, creditors 22,000, plant and machinery 80,000, buildings 2 lakh, furniture 24,000, bills receivable 56,500, bills payable rupees 23,500. So now we have to calculate the amount of capital. Capital is equal to assets minus liabilities. So assets minus liabilities. So the difference between assets and liabilities is equal to capital. So what are the assets are given here? Cash, bank, debtors, plant and machinery, building, furniture, bills receivable. So these are the assets. So we have to add all the assets. What are the liabilities we have? Creditors 22,000, bills payable 23,500. So we have to add the liabilities 22,000 plus 23,500. That is 45,500. So what is the difference between assets and liabilities? The difference is called the amount of capital. Okay. Let us see how to calculate. The amount of capital. Assets is equal to liabilities plus capital, or capital is equal to assets minus liabilities. So first we have to add all the assets. Here cash given, bank amount was given, debtors, plant and machinery, building, furniture, bills receivable. Then liability side creditors and bills payable was given. Okay, here cash value is 25,000. Cash value 25,000, bank value 47,500, debtors 18,000, plant and machinery 80,000, building rupees 2 lakh, furniture value 24,000, bills receivable 56,500. So minus, what is the liabilities? Creditors plus bills payable. Creditors value 22,000 plus 23,500. So the total asset value 4,51,000, liability 45,500. So the difference between these two, the amount of capital is equal to 4,05,500. So the capital is equal to assets minus liabilities. Okay. Now we shall see another problem in accounting equation. Prepare the accounting equation on the basis of the following. First transaction is started business with cash rupees 70,000. Second one, credit purchase of goods rupees 18,000. Third transaction, payment made to creditors in full settlement rupees 17,500. Next one is purchase of machinery for cash rupees 20,000. Okay. Now we shall see the solution for the problem. First transaction is started business with cash. So started business with cash. So cash account and another one is capital account. Cash account and another one is capital account. Here cash increase, then capital is also increased. So cash increase, capital is also increased. So cash account increase plus 70,000, capital is also increased rupees 70,000. The next one is credit purchase of goods. So purchase account and another one is creditors account. Purchase account and another one is creditors account. So liabilities increase,
So liability increase. A purchase is also increase. So asset increase, liability is also increase. So under the stock column 18,000. Then creditors amount 18,000 increase. So the equation for this transaction is already we have 70,000 cash plus 70,000. So cash value 70,000, stock value 18,000. So stock value 18,000, then capital 70,000, here creditors 18,000. The next transaction is payment made to creditors rupees in full settlement. So payment made to creditors. So we pay settle the amount. So actually 18,000 actual value, but we have to pay only 17,500. So the difference between these two is 500 is the discount received. So that is a revenue for us. So that amount added with the amount of capital. So 500 is a discount received. So discount received 500. Discount received. Discount received in the sense 18,000 is the value of goods. We have to pay only 17,500. So 18,000 minus 17,500, the difference is 500. So that is the revenue. So that is added with the amount of capital. So cash value decrease rupees 17,500. 18,000 is also decreased. The creditors value. Then add 500 is the amount of capital. So the net value is 70,000 in cash. The 17,500 will be reduced. So minus 17,500, remaining amount is 52,500. His stock value 18,000. Capital value already 70,000, revenue 500. So the total is 70,500. Okay, here there is 0, no creditors. Then purchase of machinery for cash. Here machinery account and another one is cash account. Machinery account and another one is cash account. Here cash decrease, machinery stock asset value increase. So here cash decrease, so minus 20,000. Machinery value increase plus 20,000. So what is the net amount? 52,500 minus 20,000, 32,500. 18,000 is the stock value. Machinery value 20,000. Machinery value 20,000. Here capital 70,500. Okay, creditors value 0. So this is the procedure for entering the transaction. Okay.
Let us see. There are so many transactions are there. How these transactions are analyzed. How to identify in each transaction. There are 2 accounts. So what are the accounts are involved here? How to identify the nature of accounts, which is to be debited and which is to be credited. That is how to apply the rule. Here, from the following transactions, find out the nature of accounts and also state which account should be debited and which account should be credited. Here first one is nature of transaction. First transaction is rent paid. So rent paid. What are the accounts are involved here? Rent paid by cash. So what are the accounts involved here? One is rent account and another one is cash account. Rent account and another one is cash account. Here next one you have to identify which type of account, whether it is a personal account, real account and nominal account. Here rent account is relating to nominal account because it is one of the expenses. So rent account is expenses, so that is relating to nominal account. Cash account is asset, so that is relating to real account. Now you have to apply the rule. Okay, debit all expenses and losses, credit all incomes and gains. So here nominal account, the rule for nominal account is debit all expenses and losses, credit all incomes and gains. So here rent account is one of the expenses. Okay, rent account is one of the expenses. So rent account will be debited. So rent account debited. Cash account is a real account. The rule for real account is debit what comes in, credit what goes out. Here, so this account will be credited. So real account will be credited. Then next one is interest received. Interest received, here what are the accounts involved here? One is cash account and another one is interest account. Cash account and another one is interest account. Next one is you have to identify the nature of accounts. Cash account is relating to real account. Interest account is relating to nominal account. Now you have to apply the rule. The rule for real account is debit what comes in. Here cash comes into the business, so that account will be debited. Interest is the income for us, so credit all incomes and gains, so interest account will be credited. Then next one is purchased furniture. Purchased furniture, here what are the accounts involved here? Furniture account and another one is cash account. Furniture account and another one is cash account. So here furniture account is relating to furniture account and cash account. Furniture account is relating to real account. Cash account is relating to real account. Both are real account. Now you have to apply the rule for real account. Debit what comes in. So furniture comes into the business, so that account will be debited. Here credit what goes out. So cash goes out of the business, so that account will be credited. So here furniture account data to cash account. Next one is machinery sold for cash. Here what are the accounts involved here? One is machinery and another one is cash account. So here there are two accounts involved here. One is cash account and another one is machinery account. Here cash and machinery both are relating to real account. Now you have to apply the rule for real account. Here cash comes into the business, so that account will be debited. Machinery goes out of the business, so that account will be credited. Okay, is it clear? Then next one is purchased goods for cash. So purchase goods for cash, here what are the accounts involved here? Purchase account and another one is cash account. Here both the accounts are relating to real account. Here now you have to apply the rule. Debit what comes in, credit what goes out. Here goods comes into the business, so that account will be debited. Cash goes out of the business, so that account will be credited. Then next one is goods sold for cash. Here there are two accounts involved here. One is cash account and another one is sales account. Here cash account and sales account, which is relating to real account. Cash account, sales account is relating to real account. Now you have to apply the rule. Debit what comes in. So cash here comes into the business, goods sold out. So per cash account debited and sales account will be credited. Then outstanding salary. Outstanding salary in the sense the amount of salary which was incurred during the period, but that is not payable. That is called outstanding salary, not yet paid. That is the meaning of outstanding salary. Here outstanding salary account and another one is outstanding salary account. Here outstanding salary account. Here salary account is relating to nominal account. Outstanding salary is one of the liability. So this is comes under representative personal account. So outstanding salary is relating to representative personal account. That is one of the classification of the personal account. Okay. So now you have to apply the rule for nominal account. Here salary is expenses, so that should be debited. Here credit the giver. So we are the responsible to pay the salary amount. So that should be credited. So outstanding salary will be credited. Then next one is paid to Surender. Here there are two accounts involved here. One is Surender account and another one is cash account. So Surender is relating to personal account. Cash account is relating to real account. Here personal account, debit the receiver, credit the giver. Here Surender receiver. So Surender account will be debited. Cash goes out of the business, so that account will be credited. Then next one is purchased goods from ROM. Purchase goods from ROM. Here there are two accounts involved here. One is purchase account and another one is ROM account. Purchase account is relating to real account. ROM account is relating to personal account. Here you have to apply the rule. Here purchase goods comes into the business, so that account will be debited. Here ROM account, that is the personal account, credit the giver. So here ROM account will be credited. The next one is goods sold to Rahul. Here Rahul account and another one is sales account. Here there are two accounts involved here. One is Rahul account and another one is sales account. Rahul account is relating to personal account. Sales account is relating to real account. And this personal account, debit the receiver. Here Rahul is a receiver. So Rahul account will be debited. Then sales account, goods goes out of the business, so that account will be credited. So these are the procedure for analyzing the transactions, for recording the journal entries in the books of journal. So before recording the transaction in the journal, first you have to identify the accounts. Next you have to identify, after identifying the account, which is to be debited and which is to be credited. Okay, do you understood? Okay, then next one.
On the basis of real account, debit what comes in, credit what goes out. Under nominal account, the rule of accounting is debit all expenses and losses, credit all incomes and gains. How will you classify some of the accounts into personal, real and nominal? For example, investment. You have to find out. Investment is one of the items, one of the account. Here investment is relating to whether it is a personal, real or nominal. Investment is relating to real account because investment is one of the asset, so that is relating to real account. Freehold premises, that is also relating to asset, so that is also comes under real account. Accrued interest to share, that is representative personal account. Haryana Agro Industries Corporation, that is artificial personal account. Raw Mechanical Works, that is also artificial personal account. Salary account, salary is one of the expenses, so which is relating to expenses account. Then loose tools, loose tools is one of the asset, so that is relating to real account. Purchase account, purchase account is also one of the asset, so that is also relating to real account. Capital account, that is comes under personal account because the amount is contributed by the proprietor, so that account is relating to personal account. Then toll tax account, that is also one of the expenses, so that is relating to nominal account. Then dividend receipt, that is one of the income which is relating to nominal account, income, so that should be credited here. Sales account, it is one of the asset, so that is relating to real account. Next we are going to see about journal. What is the meaning of journal? It is a foundation of the entire bookkeeping work of a business concern. So here it records all day-to-day business transactions, that is called journal. This journal is nothing but here day-to-day transactions, day-to-day business transactions used to be recorded in journal. It is a book of original entry or prime entry or preliminary entry or first entry. The form or manner in which transactions are recorded in the journal is called journal entry. Journal is called a book of original entry because various ledger accounts recorded and are posted from this book. So basically journal means it's a foundation of the entire bookkeeping work of a business concern. Here all the business transactions are recorded in a chronological order. This is also otherwise called as original entry or prime entry or preliminary entry or first entry. Is it clear? Okay, then next one is what are the characteristics of journal. Here journal is a book of original entry. Journal means it's nothing but it is a book of original entry. Next one is it keeps a chronological record of the transactions, that is according to occurrence of the transactions. Third one is it helps a ledger, which is a principal book of accounts. Then journal shows a complete picture of each and every transactions. So this is a nature of transaction on the basis of transactions with the help of narrations. Narration means it's nothing but it's the explanation of the transaction. It also known as day book. Then let us go to journalizing. Journalizing means it's nothing but it's a process of recording a transaction in journal is called journalizing. That is the process of recording a transaction in a journal is called journalizing. What are the steps to be followed in journalizing business transactions? There are several steps. Here first step is, first you have to ascertain what accounts are involved in a transaction. First you see the transaction, in that particular transaction what are the accounts are involved here. First you have to identify the transaction. Then second step is ascertain what is the nature of accounts involved here. First you have to identify the transaction. After identifying the transaction, so in that transaction you have to ascertain what are the nature of accounts involved here, whether it is a personal account, real account or nominal account. So you have to identify the nature of accounts. Then third step is you have to ascertain which rule of debit and credit is applicable for each of the accounts involved here. After identifying the accounts, next one is you have to identify or you have to ascertain whether it is debit or credit. Next one is ascertain which account to be debited and which account to be credited. Here for example salary paid. Salary paid is one of the transaction. So you have to identify the transaction. Second one is what are the nature of accounts involved here. In the transaction of salary paid, what are the accounts are involved here? Nominal account and another one is real account. Here salary is a nominal account. Okay, cash account is a real account. So there are two accounts involved here. After identifying the accounts, next we have to apply the rule, whether it is debit or credit. Here salary account is relating to nominal account. So what is the rule of nominal account? Debit all expenses and losses, credit all incomes and gain. So here salary account will be debited. Here cash account is a real account. Here the rule for real account is debit what comes in, credit what goes out. Here cash goes out of the business, so that account will be credited. So you have to apply that rule under step 3. Then step 4, which account is to be debited and which account is to be credited. Here salary account will be debited and cash account will be credited. Then next step is record the date of transaction in the date column. So you have to write the date, then you have to apply the whether it is debit or credit. So first you have to apply the debit column and another one is credit. Then under this sixth step, write the name of the account to be debited. So that should be recorded in the left hand side. You have to write it DR, debit. DR in the sense that is called debit. Then seventh step, you have to write the credit item. Here credit is cash. So to cash. You have to record the to cash in that particular column. Then eighth step is you have to write the narration, the next line in the particular column. Narration means it's nothing but the explanation of the transaction that should be recorded under this account. Then last one, you draw a line, the entire particular column to separate one journal entry from the other one.